Okay, so we are going to start how to start scalp trading. And what's the difference between scalp trading and day trading? Scalp trading are trades anywhere between 1 and 5 minutes, and you're looking to get a percentage of about 5 to 8%. Very quick, in and out of the position. That's why it's called a scalp trade. In, out. A day trade is something where you hold much longer than a scalp trade. Roughly, it could be anywhere from 1 to 3 hours. Now, usually with day trades, you're aiming for about a 30% return with a stop loss roughly around that 5 to 8%. Now, I didn't mention the stop loss for scalp trading. Scalp trading is a higher risk trade, and it's not recommended for people that are just starting to trade. This is more experienced traders that can control their emotions. Now, with scalp trading stop losses, you need to know that the stop loss is about 1 to 2%. So you're going to get stopped out more frequently, but you're doing that to make sure you protect your capital. All right. So now that we have the clear definitions out of the way, let's go right into how to chart it. You probably see me in the morning. I chart out the first 15 minutes, and I do something called wait the first 15 minutes, right? You may wonder why you're missing the move. Well, yes, for that first 15 minutes, I am missing it, but the first 15 minutes is the highest in and output volume. That determines direction. So when you scalp trade, there are three stages: direction, confirmation, entry. Those are the three confirmations, three steps. So the first step is wait the first 15 minutes. So we're going to do this. We're going to use SPY. Let's go. I'm just looking for 9:30. That's all I'm looking for. Not this morning, because this morning was a little choppy. It's not going to be a really good example. Okay, we're going to use this right here. I'm just going to mark out some things so that it's much easier to see. Where the heck did my chart go? There you are. Okay, now finally we're at the chart. This one's going to be a really interesting. The reason why I picked this is because the other day it was a false breakout, and the strategy works for continuations. It also works for reversals, but it's a little bit more trickier. So what we're going to do is we're going to obviously discuss the more difficult one, because if we could do the more difficult stage, the reversal stage, the continuation one is much easier. Okay? So what I have marked out for you is 9:30 a.m. in the morning to 9:45. That is going to be our direction point. This is going to tell us, do we go up or down? It gives us bullish, bearish, uptrend, downtrend. That's all it gives you. So now, so we got 1, 2, 3, 4. That's the 20. Why is that 20? Let me drop it down to the 15 really quick. Chart didn't look right. It's supposed to be 3 5-minute candles, and it's only 4, so that's 20 minutes. Okay, so let's pretend like it is 9:45 a.m. in the morning. We are ready to start trading. We have liquid cash, ready to make more money, and we need to first mark the highs and lows of the first 15-minute candle. Just like that, right? You can color them if we want. Usually I do blue because my yellow is the line in the sand. So it's a little bit easier. Blue is my scalp trading, and reds are my resistance, greens are my supports. So it's just conceptually for me, it's much easier to understand that. Okay, now that 9:45 starts, do you start trading? No, we do not start trading because we still have two more steps to go through. All right, the second step is confirmation. We first now know direction. If it breaks above or below, it gives us our direction. So now that we're on the 15-minute chart, we charted out the highs and lows. We're going to drop this chart down to the 5-minute chart. I don't know why it doesn't auto resize for me, but there we go. Sorry for that. Okay. Now that we're on the 5-minute chart, okay, step one was trend, right? The first 15-minute candle, we get the highs and lows. The second is confirmation. You go to the 5-minute chart to get your confirmation. Now, what is a confirmation? For this, it is a 5-minute candle close above or below a level. It could be right above it or right below it, but that's where it's going to start triggering the third step. So for right now, pretty much until about 10 o'clock, price action was choppy. It just kind of went flat. And we're not going to trade because it did not break above. See this 5-minute candle right here at 9:45? It did not close above the 15-minute range. So therefore, we don't take the trade. We wait. It could chop in that range all day long. And as long as it's in that range, we do not trade. We trade when it breaks above or below. So now we look at this candle right here. Yes, it's much easier said than done, meaning it's much easier doing it now that we know the chart. But honestly, if you do it systematically like this, it will become very easy. That's how I trade my Tuesdays and Thursdays. It's how I trade all the time. It's a systematic approach. You're really removing a lot of the emotions from it. It helps you to make the decision to either get calls or puts. So now that the first right here, this candle right here, we could see, let's get a better pointer, right here. Now we have a 5-minute candle close below down. Confirmation of puts. That should be in your head. The first was direction. The first 15 minutes, highs and lows, direction. The second, we need a break above or below on the 5-minute and a close above or below, right? A 5-minute candle needs to close above or below to get your direction. Above calls gives you the idea for calls, below puts, right? What's the third step? Now, we're probably going to have to scroll a lot more, but we go to the 1-minute chart. Yep, got to keep scrolling. So now we are on the 1-minute chart. This candle right here was the close of that 5-minute candle right here. So that was the below. Actually, technically, it was this one right here. It was the below price action. The third step is on the 1-minute time frame. You want to get an entry point. The first step, trend direction. Second step, confirmation, calls or puts. Third is your entry. This is when you execute your trade. How do you execute your trade? You are looking for price action to retest that now resistance. Resistance was that 15-minute low. The market, the first 15 minutes of market open, that low. And right here, if you entered into a risk position and puts on the SPY and set a stop loss somewhere in the, let's say, lower half of the channel. Now you may say, what the heck is the lower half of the channel? Let's say that this is the center of the channel. This yellow line is the center of the channel. Somewhere in between here, a quarter of this channel. So you're looking at a roughly 651, 56-ish. Somewhere in that general zone. Again, a systematic approach. And what you do is you set your stop loss, you enter into the position, set your stop loss, not by percentages, but by price action. So you would look on the estimator on your option contract, and you would simulate it going to 651.56, and whatever that percentage is what you're going to set your stop loss to. This could be 10, 20, whatever percentages, right? Yes, you may be saying, didn't he just say 1 or 2% for scalp trading in the beginning? Well, that's true, but you will get stopped out more frequently. So this is the little twist to it, where you're now looking for stop losses based off of price action, not off of percent of your stop loss. You're looking off of previous resistance and support levels, which if you trade the channel, halfway of the channel, it will always be your resistance. A bull channel, bear channel, this is always the case. It's just not explained to people like that, right? So, and then you're done. You just let the trade go. You don't look at the chart. You don't touch the chart. You don't do anything to that contract. You just enter into the trade, their contract. You set your stop loss and you let it ride. That's it. Very easy. If you get stopped out, that's it. Do not trade anymore. You're done for the day. If you do not get stopped out and you're in profit 20, 30, 40, 50%, you raise your stop loss in profits. It would be foolish and unwise for you not to raise your stop loss into profits. Do not be greedy. Greed is what disintegrates a portfolio. So now you may think, what are the contracts am I going to be using for options trading, right? Well, if you're scalp trading, you're really only trading 0 DTEs or 1 DTE, date to expiration. That's what DTE stands for. So with that being said, you're really just looking at the money above or below, really close to at the money, whatever the contract is, above or below. That is up to you to decide. If you want to go out more further out of the money, further in the money, they're more expensive either way. Well, depends if you do a call or put, but you get the idea. And you're adding more risk. For scalp trading, we are looking to minimize as much risk as possible where we can. And by doing that is by buying close to at the money. It is more expensive, but let's say the contract, for laughs and giggles, let's say the contract at the money is $300, and you're like, ooh, that's a lot of money, $300 per contract. You're crazy for a 0 DTE. Well, are you really risking the full $300 if you set a stop loss? You're not. Let's say you set a stop loss for $10, right? So you're risking $10. You're pretty much risking $10 of capital at that moment. You're setting a stop loss at, let's say, 290, right? Let's say you bought it at 300. You set the stop loss at 290. Now you're only risking $10 of that portfolio. So now you're able to maximize your money and also protect your capital. It is like a small way of thinking of trading margins account. It's the same concept. But with this, you got the money and you don't have to worry about getting liquidated because you have a stop loss. Now, for day trading, how do we get into contracts for day trading? Great question, right? Well, the easiest way to think of it, to conceptualize it, is two things. You need to understand how the options move with the stock. So, for example, Tesla, I can go out $15 out of the money and still be very, very profitable and safe trade. Compared to Apple, if I go $15 on a call out of the money, that I'll get IV crushed. The contract won't move. It's a slower mover in comparison to Tesla. Tesla has a higher option volume than Apple. So with Apple, I could probably get away with a $5 out of the money. So it really helps to get that idea. So then the second concept would be for if you want to hold the trade for 1 day, you get an expiration for 1 week. If you want to do 2 days, hold it for 2 days, then it's 2 weeks, 3 days, 3 weeks, and so forth and so forth. So pretty much every day you want to hold it, get a week expiration. That's it. That will help you with data decay. That will help you with IV crush, and that will increase your chances for success. And that is pretty much the gist of how to scalp trade and slightly day trade. You could do the same concept with day trading and how we chart it. It's very easy. Now note, there are no EMAs, there is no volume, there are no indicators. With this strategy, there are no indicators. You may say, doesn't he always use indicators? He always says volume. He always uses EMAs, exponential moving averages, and VWAPs, and volume profile. That is true. What I'm trying to find the bottom. And I'm very, very good at pinpointing the bottom of a lot of stocks and ETFs. Very good at that, based off of volume. We are day trading. We're not necessarily looking at volume too much besides the first 15 minutes. Once the first 15 minutes comes and goes, now is all eyes on price action. That's it. This is an easier, simplistic way to scalp trade. Now, if you're just joining, this is recorded. We're doing a 2-for-1. I'm making a class and also teaching. So in about a couple minutes, we will switch over. I will close out this video, and we will take some questions. All right, just let me do everything. This pretty much concludes how to scalp and day trade, the options, everything you need to know, especially how I do my Tuesdays and Thursdays trades. That is what I do. All right, let me close this out.